Hello and welcome back to Crypto Clarified. My name is Vin Tran. I help lead business development at Wisdom Tree Digital Assets.
And I'm Davila Shilinskite, and I'm responsible for digital asset research at Wisdom Tree Europe.
And today we're joined by Oscar, Chief Operating Officer at Black Manta Capital Partners. We're going to be talking about everything from tokenized whiskey to regulation changes throughout Europe and the rest of the world when it comes to tokenization and blockchain.
Hi, Oscar. Great to have you on Crypto Clarified podcast. So as we kick off, imagine you are at cocktail party. How would you explain to people there what Black Manta Capital does?
Thanks for the question and pleasure to be a part of the podcast today. Actually, that's a funny question because that's something I actually have to do quite often. But it's never so easy. It depends always on the audience, how much do you understand of capital markets and also of the crypto space in general. I would say Black Manta is more on the traditional side of things. So we are working with tokenized securities, so like money market funds and commodities. So at the end of the day, we are utilizing crypto technology or distributed ledger technology, so different blockchains, to change how assets can be moved. So we are tokenizing these assets on different blockchains, mainly in Europe, but also abroad, to give investors an easier access to these assets, but also on top of that, to provide them with additional utilities so that they can move it more easily as collateral, move it more freely, and also trade 24/7 at the end of the day. That's what we have been doing for the last 8 years. So we have been the first ones providing that type of service in Europe. So back in 2018-19, when we were founded, we were the first ones who received a license out of Germany. And since then, we have been focusing on tokenized securities.
Very interesting. And how about you personally? How did you end up working in the space? Like, what career steps did you take to get here?
Actually, a funny coincidence, like one of the people you interviewed quite recently, Benjamin Levitt from Blue Chip, also based in Vienna, actually. We started out back in 2017. He came in from, I would say, the playing poker, and I came in with a bunch of friends, actually, back then. And we were trading and buying out of curiosity. So I would say a coincidence and fascination for new technology and markets. Then it stopped because I started studying law, worked for a couple of different law firms. And then back in 2020, actually, I got the job offer to work for Black Manta, previously in a legal role. But now I'm responsible for the operations as we've been building up the company over the last 6 years since I'm here. Have added new businesses, purchased vehicles in Luxembourg and abroad. And I've also done some advisory work in the DeFi industry, actually in Ireland. So working with receivables and forward financing companies, and also one of our shareholders is running a crypto custodian, also actually out of Ireland, where I have been supporting with the compliance and AML role for the new MiCA entity. So I would say it's a mix of like early fascination with a group of friends, then lost it a bit, I would say. And then I really came back in when I saw that now it's the connection, back then I actually thought it would happen quite faster than it actually did. But when the connection between crypto and real financial products started happening, so when it came to tokenized securities.
And it sounds like you really have a broad brush of experiences within crypto and DeFi. I remember you co-authoring a piece on DeFi as well, and you mentioned that earlier in terms of tokenizing assets and making it composable. So if we can double click there, what did you see early on when it comes to DeFi? And I want to touch on that before we kind of move on to the legal and compliance piece.
Quite funny that you actually have seen a piece that's actually a couple of years old. Back then, when I worked for the Irish company, we had a lot of conversations with the guys at Centrifuge. And at the end of the day, I personally always believed that DeFi is a great place and an idealistic model that can work. But from my feeling, it was most of the things that called themselves decentralized were not decentralized, because at the end of the day, they always had management teams They had different entities which were operating the platforms where people then started trading. So at the end of the day, people usually try to disguise traditionally regulated models behind decentralization. And if you took a look under the hood, most of the business models, in my opinion, if they have been dealing with securities at least, should have been regulated in the past already, because the regulation was always there. And when it comes to law, you always think of form over substance. So you really take a look at what it is, and if it's a securities business and if it's a trading venue, it's always a trading venue, no matter what technology is being used. And I think this is something that has been missing or been ignored in the DeFi industry for a while. I think that's really changing now.
Yeah, I couldn't agree more. And it's an interesting dynamic we're seeing in the market where we see larger DeFi folks like an Aave or Morpho, for example, that are decentralized and are growing in their respective lending markets. But you're also seeing more, uh, I don't know if centralized is the word, but more institutional players that typically work in centralized and very heavily regulated industries, right? Come to market. So that dynamic is it's interesting. And growing in parallel. So kind of moving on to the regulation side, how do you guys operate typically under regulation? Obviously, you guys are an investment bank. You're very heavily regulated. What does that look like by jurisdiction, for scale? How do you think about that?
So we have been a regulated broker-dealer since 2019 out of Germany. So we're fully BaFin regulated there and can distribute any type of securities, may it be traditional or also tokenized, to investors in the whole European Union. So regulation has always been the centerpiece for us. Actually, back then we started out with the regulatory side, and only the tech stack was built a couple of years later. Because back then, when we thought if you would be building an investment bank, you also start with the relation, with the business model behind it, and most of the time not with the tech stack. I think this really shows today, because there are a lot of different tech providers which provide great tech, but there are not so many people, at least in the, I would say, fintech space, who fully understand regulation. When it comes to regulation, I think MiCA in Europe at least is really changing that, because with the understanding from companies that also if you're dealing with crypto assets, so traditional crypto assets such as Bitcoin or Ethereum, you also need to consider what would happen if you're not dealing with crypto assets, but with digital securities, so tokenized securities or RWAs. So therefore, regulation is really at the heart of our business. We are also providing our license to different platforms like crypto exchanges who want to offer futures, because futures in Europe are also derivatives, so therefore securities. So if you want to invest into ETH 10x, which is an interesting product, you need to have a securities license here. So I think like regulation in general and how regulation has been adapted in Europe, but also in the US over the last couple of years, is really helping the industry. I'm not sure how you're seeing it at Wisdom Tree, but at least how we see the market and the market behaving is that the more legal clarity you have for big institutions, the easier it gets for them to also enter the space, because all of a sudden they can really have legal engagements with crypto custodians and other platforms who have been unregulated in the past, who are now on a, I would say, fair playing level field with these institutions, and they can trust them as service providers.
Yeah, absolutely. And I think that's where the technology really becomes important here, and can differentiate between distribution via regulated rails, but also unregulated rails. And I think that's where blockchain really enables a different type of access point to your point earlier. Uh, and at Wisdom Tree, at least here in the US, we've done a variety of different announcements recently where we're partnering with regulated broker dealers. We're also partnering with fintechs that are unregulated, but can rely on our regulations as a broker dealer example to then distribute. So I think that's where it's really fascinating to see how compliance, how innovation will impact compliance through the blockchain lens.
And Oscar, when I was introduced to Black Manta a number of months ago, one thing that absolutely caught my attention was tokenized whiskey, which was an incredible concept. So it would be interesting to hear from you, like, what else are you involved in with respect to tokenization? And are there any other asset classes that we would not even think about that people are looking to tokenize or are tokenizing?
I think like the tokenized whiskey one is already quite interesting. This comes because our group of people, our company, my colleagues, are interesting. A lot of them are Irish. So we were originally founded by Austrians and Germans, but over time, more and more Irish people came into the mix. And through them, we had some connections to people who actually professionally invest into whiskey. So from one of them, the idea came, hey, why don't we set up a vehicle where you can invest into a tokenized whiskey bond at the end of the day? Because whiskey has been a quite outperforming asset in the alternative asset class for the last couple of years, and also a fairly stable asset. When it comes to other asset classes that most of people don't think about, I think people want to tokenize pretty much everything. We are quite upfront with them most of the time, or not most of the time, but some things don't make sense to tokenize. So at the end of the day, you still need to have an interesting financial product as an underlying asset. But people want to tokenize IP rights and stuff like that. I think this is something that's going to come in more and more into play. I think what already was quite unconventional a couple of years ago are like prediction markets. These are also tokenized assets, but there you're betting on sports games, which is nothing new, but you're also betting on revolutions in countries. I think this is a financial asset at the end of the day that's completely new to at least the traditional financial world.
Fascinating. And Black Manta, if my memory is correct, you are involved in European business, in Asian business, in US business. Are there many differences between what people are looking to tokenize and versus what people are looking to invest into in those different regions?
Yes, that's actually a good question. So we are mainly focusing in Europe when it comes to distribution. So if we're supporting companies in distributing their assets, it's for the European market currently, as we have been licensed here. We are actually planning on expanding our licenses across the globe. We already have offices in Asia and in the US. We have a foreign broker-dealer license in China for one of our partners as well. When it comes to what people are looking to tokenize, I think it's actually, for most of them, fairly similar. Many of them are coming from the traditional real estate industry. I think that has always been a big topic for tokenized RWAs over the last couple of years. That's, I would say, on the alternative side. And then you always have your typical fund managers or money market funds, so a little bit more liquid assets. But I think it's fairly similar all across the globe. So I feel like in Asia, people are usually have a little bit more appetite for risk compared to Europe. So that's the differentiator in the assets. But when it comes to the asset classes, I think it's fairly similar all across the globe at the moment.
I want to focus on real estate. I have a personal interest there. My background before crypto was actually in real estate. So when you say tokenizing real estate, what does that really mean? Like from start to finish? Because I think there's a lot of misconception behind tokenizing doesn't solve a liquidity issue. It solves an access point issue. Because real estate, as everyone knows, it's a illiquid asset, right? It's hard to sell on a daily basis, unless you're working with REITs. So what does tokenizing real estate look like for you?
I 100% agree with you that it's a common misconception that you're solving the liquidity issue. If you're tokenizing real estate in the first step, it's really an access issue that you're solving. You're allowing people to enter an asset class which is usually quite hard to enter. If you're small or medium, so have a normal income, I would say, usually. And it also helps you to diversify your investments across different real estate assets. When it comes to real estate tokenization, I think mainly we're speaking about tokenizing financial instruments with real estate underlines, so bonds where real estate is the collateral, or shares in an SPV. Because for most jurisdictions, it's quite hard to tokenize the actual assets or the actual real estate, because from a legal perspective, this is most of the time not allowed. So there are some jurisdictions which are changing that, so you can then actually transfer the right to a property on chain. But most of the time, it's really the financial assets that we're talking about.
And what types of assets do you think have the most runway into the next year in terms of tokenization?
When it comes to real estate assets, I feel like people currently searching for a fixed yield, so fixed around 10% yield, what we have been seeing in the market, with quarterly or annually dividend payments, so that people can actually see that if they invest into something, that the cash is coming back with not too long durations, because how the capital markets in general have been over the last couple of months or years actually now. I feel like people are becoming to an extent more risk averse, so they want shorter durations and higher yields with more frequent payouts. So that's at least what we see in the real estate industry. And then they're taking a look at the location. So if you have an asset, if you're a European investor, you usually tend to invest into your home markets or close to your home markets, because that's what you know and what you personally trust. Because for most of the people, real estate is an asset to diversify your investments into. You anyhow have your crypto investments, your traditional ETFs or ETPs. And then real estate, I think, is for many the first alternative investments they're doing, aside from commodities. So that's when they're looking for, I think, stable yields.
And we talk a lot about access. Who do you think benefits most from tokenization in the end of the day?
It depends on what you're tokenizing. If we're talking about tokenized US dollars, I think countries which are traditionally really unbanked, so sometimes South Americans, Africans, or parts of Asia, I think they really benefit from tokenization. So countries where you have a very volatile currency now can hold US dollars in their wallet. So I think they are really the beneficiaries of tokenization when it comes to the normal person at the end of the day. Because in Europe or in the US, we most of the time forget how privileged we are with the access we have to capital markets. We can invest in pretty much any stock, any ETF, and other forms of assets, but that's unusual for most parts of the world. So therefore, I think these are the real beneficiaries of it. And then you have your traditional financial institutions, where at the end of the day, all of us would benefit from, because they can offer additional products which are more flexible, which are fast, and at the end of the day, also cheaper once the infrastructure has been implemented.
So Vin just got to discuss his favorite topic, real estate. I'll ask my favorite topic because I am responsible for doing research on various blockchains, so digital asset research. And I believe you're involved with Canton Network. Do you mind just telling us why Canton Network, who else is involved, how you're using it? Just, tell us the full story, please.
Yeah, actually, I really enjoy talking about Canton, to be honest. I have been leading the Canton development on our end for a while by now. So we started out on Canton, I think, 2 years ago by now. So we are a node operator there. We tokenized the first real estate issuance in Europe. So it's actually your favorite topic and Vince. When it comes to Canton, it's a very interesting infrastructure. So I think by now pretty much every major bank is live on Canton, may it be Goldman Sachs, JP Morgan, but also the DTCC in the US is working with Canton, because Canton has quietly been building the infrastructure needed for financial institutions. So they're building a public-private chain, private because the transactions are private, and public because in theory everyone can build on it. This is something an institution actually needs, because you don't want that your salary is shown publicly or that also your trades are publicly on chain. You want it to be private, and you can only then show it to people that actually need to know, so to the auditor, to the regulator. So that's why Canton is interesting. And if you're following the media, they actually disclosed yesterday that they have raised another 335 million from Andreessen Horowitz and a few others. So they're really building that infrastructure that's needed for traditional financial assets.
Brilliant. You mentioned you're a node operator, right, on Canton. What does that mean?
So we are actually validating the system. So if there are transactions going through Canton, they're mainly validated by the super validators. And at the beginning, you needed to be a node operator to actually then also deploy apps. So to tokenize assets on Canton, earlier you had to be a node operator. Still today, we are running our node. We are tokenizing assets together with digital assets. So the operative entity who originally built Canton, which is now run by the foundation. But But that's why we're doing it.
And now we are halfway through the year. What are your top 2 priority topics for the rest of this year?
I think the top 2 priorities are quite clear on our end. If you've been following tokenized securities or RWAs over the last 6-7 years, everyone thought it will happen next year, it will happen in 2 years, or it will happen next year again. And it was slower than expected because the infrastructure really had to be built. Now that the infrastructure is there and being implemented, you can really feel that the market is maturing. So we have gotten bigger customers such as SBI, with whom we have tokenized the UBS money market funds and stuff like that. So it's really focusing now on building on our strengths. So building on our know-how, on our regulation, and working with bigger players and bigger names also in the space to really bring products live. Because traditionally, most of them have really had research teams in-house, have done a lot of pilot projects, but now it's beginning to be really commercialized. So we are talking to a lot of people in the Canton ecosystem and some other bigger banks to bring money market funds to life and a few other asset classes. That's one part. And then the second one is, as earlier said, MiCA is enforced now in Europe. So all of the crypto exchanges are opening their headquarters somewhere in Europe, most of them actually in Vienna. And they are not just taking a look at spot trading for crypto assets, but also at structured products and derivatives. And this is where we can help, because we can provide our license to them so they can then actually offer derivatives to the end customer. So these are the main 2 goals for the next 6 months.
To just double click on that, because I know regulation is everyone's favorite topic. So when you say MiCA, what do you mean by that? What does it really mean for institutional investors, for retail?
So MiCA is the markets and crypto asset regulation in the European Union. So it regulates the service providers who offering crypto services. So it may be custodians, crypto exchanges, but also advisors who are building your portfolios for you. It helps to protect end customers because it gives clear audit guidelines. It gives regulators the allowance to take a look inside the companies, see who is running the company, how financially stable are the business models. So at the end of the day, it gives comfort to the end customer, but it also gives comfort to the institutions, because a bank now can get licensed to provide crypto services, so they can offer crypto service themselves now, aside from the additional securities businesses. But they can also now engage with different crypto asset service providers, such as crypto custodians, because they can now open custody accounts for their customers, because they're now also engaging with other licensed entities, compared to like 2 or 3 years ago, where they had to interact with completely unlicensed entities and therefore didn't know what they were getting into.
I want to make kind of a full circle moment. So you mentioned it rolling out broadly in Europe. How do you think that impacts innovation across this industry between regulated and unregulated entities?
I think in Europe, you will see a lot of consolidation in the next 12 to 18 months. So a lot of companies will not get a license here, or even if they get a license, they will not be able to maintain it because their revenues will not be able to cover the compliance costs at the end of the day. That's at least what we have been seeing and hearing in the market. So after the consolidation, I feel quite comfortable, because at the end of the day, then you will have a lot of robust business models which are actually working from a commercial perspective in a regulated environment, and that's something you can build on. Yes, it's going to be harder for new entrants. I think this is something that Europe hopefully changes in the future, that you have different entry barriers for bigger players and for smaller ones, so that actually you also can be successful and compliant at the same time as a startup. And that's something that would need to be amended. Therefore, the regulation would need to be amended. But I think in general, regulation can be good. At the moment, we are definitely also over-regulating in Europe. But it's always a hard mix to catch up with new technology for the regulator. And I just want to say, I think like at the moment in the US, we have a good example with prediction markets. In the US, you have also new regulations for products that are traded on prediction markets. I think that's a good example where the US actually has been up to date and up to speed compared to Europe, where you have actually implemented new regulations for a new type of market.
Yeah. I think that's another misconception that a lot of non-crypto people have, is that the industry does not want regulation, when in fact, I think we do, right? Like, I think regulation paints a better picture for us to innovate, to better build. So I couldn't agree more. And it's very different, to your point, between US and Europe. Uh, there's one there's one program I wanted to bring up, which is the DLT pilot regime that I know you guys are involved in. Can you tell us a little bit more about that?
Sure, the DOT pilot regime was the aim from the European Union to allow for distributed ledger based exchanges, not crypto exchanges, but exchanges where you can trade security tokens, so money market funds, equities, and other traditional financial assets. It was actually a good approach to build a sandbox for that. It had its challenges because the asset class was quite limited at the beginning. And we did the first issuance on a DLT pilot regime in Europe ever. So this was the money market fund I spoke about earlier together with SPI. So there we wrapped a UBS money market fund into a security token out of our vehicle and issued it on 21X, who have been the first approved DLT exchange in Europe. So I think the concept in general was good from a regulatory point of view, but at the same time, also too many challenges and too narrow. But they're also currently changing it because they're seeing, okay, the players in the market are having business models which make sense. From a European Union, we need to allow more to be able to compete with other market participants across the globe, and that's what's changing now. So you have a quite good investor protection, but at the same time, they're opening it up to new products.
Interesting. So let's imagine we are 5 years away. How does a healthy tokenized market look like? Who's involved? What are they trading? Are they doing daily trading? Are they making long-term investments? Just tell us the vision for the next 5 years.
I think the vision for the next 5 years starts with consolidation in the traditional crypto industry. You will see, we are already seeing a lot of M&A activity when it comes to stablecoin providers and other infrastructure providers. As an example, Zodiac Custody has been bought by Standard Chartered last month. So I think we're going to see more and more of that in the next couple of months to 1 or 2 years. And while that is happening, more and more traditional players are implementing the infrastructure that has been built. So as an example, the DTCC is going to bring live this year on Canton tokenized US Treasuries, which are natively custodized and then issued by the DTCC, which becomes an interesting product for market makers and funds who want to use it as collateral. So we are really seeing infrastructure being implemented into traditional financial markets. And once that has happened, I think we then really see also the adoption on the buy side for tokenized assets, because you need to have the infrastructure in place to have an easy access. At the moment, people are way too often thinking about how is the technology working? How can I actually enter the asset class? How can I open the wallet? How can I bridge an asset? So once these barriers have been lifted, then you're also going to see more buy side demand. And I personally think that this is going to happen in 1.5 to 2.5 years after the infrastructure has been placed. But I think you're also quite close to the buy side at Wisdom Tree, so I wanted also to know, how are you seeing the market?
So I'll let Vin comment on here because he's engaging all across the world about our tokenized products.
Yeah, I think I agree with you. It is an infrastructure question. I think we're evolving and we're maturing in the sense that we don't need to necessarily talk about blockchain anymore. You just need to explain why being on blockchain is better. And we can do that without ever saying the word blockchain, right? You can say it's cheaper, it's faster, you can manage your own self-custody. And I think these are buzzwords, right? But these are things that really matter when it comes to why we're building into space, and speed and the ability to uh, have access to financial instruments that you normally don't. So infrastructure-wise, I think it's getting built. I think in terms of mainstream adoption, I ask myself that a lot too. Uh, like, what will make it so that my cousin back in Buffalo, New York, will be using blockchain and maybe they don't even know it, right? Kind of going back to your point, aside from infrastructure and regulation, uh, what other challenges do you see when you're trying to sell this adoption?
I think what you ended with is a perfect example. It's people not knowing what technology they're using. Similar to using your bank today, you're also not thinking of how the core banking system of a bank is being run. You're not talking about the technology. You want to know that the bank is secure from a regulatory point of view. You want that it's fast, that it's cheap, and that they offer the products that you want. And I think once it happened, once you have on-chain products which are interesting for customers, so tokenized equities, tokenized money market funds, but also interesting alternative assets, but at the same time, people not knowing that they're using the technology, then it will be adapted. So once it's integrating into your traditional neo brokers, into the exchanges you're using, or also if you're a little bit in the older generation, you're using your bank account and there you can also purchase assets with. You want to purchase the asset for the asset's sake, but not for the technology sake of it. So you want to invest into an asset without knowing that you're using the underlying technology. I think then that's the biggest hurdle the market has to overcome now.
Yeah, I agree. And I probably shouldn't say this, but you're right. When it comes to bank wire, bank transfers, I have no clue how that works. So I'm sure most people don't. Uh, and that's what I usually tell people when they ask me about blockchain and why I'm so bullish on the industry is that just use a wallet, download any wallet. I'm not going to advertise any here, but download any wallet and you'll see the experience is very different and sometimes better, sometimes worse. But I think those are the infrastructure pieces that as an industry we are all working a bit.
So, talking about wallets, let's say I download one wallet 5 years from now. Do you, Oscar, think I'll be able to make all the investments that I want to make out of that one wallet? So, investing into crypto, into fixed income, into equities, commodities. Do you think we'll have that?
Yes, I think so. If the platforms allow you to onboard with that wallet. Yes, I think so. Because I think down the line, pretty much any traditional asset will be in a traditional form at the beginning and in a tokenized form. But going forward, I personally believe mainly in tokenized forms because it's, I think, comparable to when like the stock exchanges have been digitalized. Back in the days, you traded in real trading venues on the New York Stock Exchange floor, but now that's not happening anymore. People are trading via their computer. And I think blockchain is just the next iteration of that. So at the beginning, I think you will have a lot of dual systems between traditional and new ones. So that's what the DTC is currently doing. And going forward, it will be mainly natively on chain if you issue something new, because it's just the next generation of how capital markets work. So therefore, I think, yes, with your wallet you're opening today, you will have access to pretty much any asset you want to have that you can already have access to. And also on top of that, new assets in 5 years' time.
And now it may be a very difficult question to answer, but currently, traditional investment world has a lot of inefficiencies. There are processes that have been put in place, I don't know why, and now people are living with those processes. I don't know why, maybe it's just too late to change that. Do you think most of those inefficient, old style, bizarre processes will go away once we move more into tokenized space, or do you think some of the problems will be recreated?
I'm not sure if they will be recreated. I don't think that you can solve everything with new technology. I think you can do a lot of things better. You can add new utility to certain asset classes with blockchain. But I also believe that part of the traditional system, how it has been run, will also be run the same way in the future. So I also believe that most people will not open a wallet account themselves. They might use the custody account that's already integrated in their broker dealer, in their exchange, or in their bank. So I think it will be a mix of a lot of positive that's coming from blockchain, but at the same time, I also believe that part of the traditional infrastructure will remain in place because part of it also makes sense.
Shifting gears a little bit. So we talked a lot about infrastructure and crypto. What are you most excited about when it comes to this industry?
To seeing how capital markets are being changed. So this is what brought me into the industry pretty much 10 years ago, brought me back into the industry, into Black Manta 6.5 years ago. And that's what I'm still excited about today. How we transact, how assets are being moved, and how people gain access, which hadn't had access years ago. That's what is interesting to me, and this is why I enjoy it. I think we will see a lot of benefits from it in our daily lives in the US and in Europe, because we'll have access to new asset classes, or we might be able to have more flexible portfolio compositions and stuff like that. But also seeing people in different countries of the world and different parts of the world gaining access to assets where they never had access before, because it was just too expensive to provide them with access for the small dollar amounts that they actually make on a monthly basis. Now being able to hold stable currencies, to invest into assets, I think that's what I'm excited about.
And then from an asset specific question, you mentioned interesting access points, right? So what is the most interesting thing you would like to see on chain? And you can't say whiskey.
There was an interesting project by Deutsche Bank a couple of years ago where they assessed how you can put together flexible fund strategies at the end of the day. So there's a fund manager running a strategy, as an example, investing into 10 equities. You invest in it today, next year, that fund is going to be rebalanced. And that works for most of the people, but sometimes you say, okay, the new rebalance wouldn't work for the portfolio I want to have, so therefore you can exit that fund. And tokenization allows you to still own the fractions in the old composition, and the fund moves forward without you at the end of the day. I think this is something I'm looking forward to most, because you can bring pretty much any asset class on chain, and we will see that in the future. But I'm more, I would say, interested and also bullish on flexibility, transaction speed, and 24/7 trading than on any specific asset class being brought on chain.
And to conclude, do you think 24/7 trading will result in calmer markets or more volatile markets?
I think I have a mixed feeling regarding 24/7 trading. I'm excited about it because it's interesting and how the world is moving ahead. It's anyway 24/7. You have 24/7 access to your bank account. You have 24/7 access to news, to updates, to media, to being reachable, with advantages and disadvantages. So I think 24/7 trading will have the same. I think a lot of people who are used to crypto investments are used to 24/7 trading, so that's why they want it. Also, market maker from the crypto industries want to have 24/7 trading for equities because they're used to it. I think it will have advantages because you can get in and out of products more flexible. At the same time, I think it will also benefit a lot of the bigger trading firms and investment funds, because you need to have teams which are covering markets 24/7 compared to today, where you have market cutoff times, which allow you to have smaller teams. At the same time, with the rise of AI, this might also be helpful to have coverage without having people 24/7 available.
So it will be exciting world. Everything is being traded 24/7, and we have robots doing some of that trading because we humans need some sleep.
Yeah, I don't think it's necessarily sleep, but I think it's rather data analytics. I think at the end of the day, a lot of people will still make the end decision, but it's really about the research, the data analytics, and getting alerts that you now should or shouldn't take an action. And at the end of the day, the decision making is going to be done by a human.
Love this point to complete on. Thank you so much for your time today.
Thank you.
Likewise, thank you for the great conversations.
To clarify, the views and opinions expressed in this podcast are those of Wisdom Tree and Black Manta Capital Partners, and are subject to change. Anything we present in this podcast is not intended to be relied upon as a forecast, research, nor as investment or tax advice. The information and opinions expressed in this podcast are not a recommendation, offer, or solicitation to buy or sell any securities, and reliance upon them is at the sole discretion of the listener. Please remember, past performance is no indication of future results.